of the headline here, and how do you apply that headline to how you view the markets, stocks, as we enter the next month?
Well, this week wasn't just about the Mag 7 or the earnings. We also had on Tuesday GTC and Jensen's keynote. And I think that plays into the bottom line takeaway was relative to the infrastructure side. What we saw, Jensen's comments, he effectively raised Nvidia's outlook versus the street by about 15% at least for the next 5 quarters. And then we got confirmation of that on Wednesday and Thursday. And so I think that's a big takeaway. I think kind of the hidden winner this week was Nvidia. The stock didn't really act like that because I think investors still struggle with a $5 trillion market cap. They struggle with the concept that hardware eventually blows up, and it's just a mind bender to think that we're still early in this CapEx build out. So that's why you don't see the appreciation. But clearly, Nvidia was from my perspective, kind of the winner this week. And I think that's probably a big takeaway. I think something else that we take away too is just the strength of these big companies, whether it's with Apple, seeing the resurgence in iPhone from the upgrade from 4 years ago, those customers coming back. We see the habitual behavior around Google search and them being able to angle more questions into better search growth. And then we see those daily active user numbers from Meta. Steve was talking about them. And just to frame that in, I mean, they grew daily active users at 7.6% in the September quarter. That is a sequential acceleration for each of the past 5 quarters. It was 4% growth 5 quarters ago. So there is something that I take away from this week, which is just this reminder that these companies have moats, flywheels that are continuing to get strong and will serve them well in the future.
After investors welcomed further evidence of ongoing hyperscaler and national-level AI spending, Nvidia's stock slightly increased. The stock recovered after a decline the day before, rising around 1% on Friday to nearly $205. The action came after Amazon signaled that it will continue to increase investments in AI infrastructure, with plans for capital spending totaling tens of billions of dollars, a significant amount of which was set aside for AI hardware. This announcement supports the demand for Nvidia chips in the cloud. Nvidia announced at the same time that it would provide over 260,000 of its Blackwell AI chips to the government and big corporations in South Korea, including significant allocations for Samsung, SK Group, Hyundai, and Naver. For a new mega factory, Samsung alone intends to install over 50,000 units, providing Nvidia with multi-year income visibility from significant national projects. Although investors should keep an eye on supply dynamics and pricing as the build-outs go, analysts suggest that the combination of hyperscaler purchases and significant corporate government orders supports a persistent demand backdrop for AI GPUs. Nvidia benefits from strong AI server spending, according to JP Morgan, which reaffirmed the stock's overweight rating. We anticipate that demand for AI will propel Nvidia's data center GPU business to expand over several years. Mizuho maintained its outperform rating on the shares that same day and increased the firm's price target on the stock from $225 to $235. According to the company, Nvidia is still in a strong position to lead the AI race. It's obvious that Nvidia is accomplishing goals that most businesses can only imagine. And the future is still bright if you listen to CEO Jensen Huang. While in Washington, D.C. on Tuesday for Nvidia's GTC DC conference, he declared, "Our GPUs are everywhere." He explained the various applications of Nvidia's chips, including quantum computing, driverless cars, telecommunications, manufacturing, and AI models. All of this is made feasible by Nvidia's widespread presence. The stock of Nvidia has increased by over 51% so far this year, and by an incredible 1,370% over the previous 3 years. Looking at things more broadly, you would have had $293,100 in your nest egg 10 years ago if you had invested a meager $1,000 in Nvidia. That's money that can change your life. Even if you may believe that Nvidia's prime is over, the company still has a lot to offer and more profits to give to investors. You would expect that a corporation with as much activity as Nvidia would have a very high valuation, yet this one is shockingly high. However, compared to its 5-year PE median of 68, its projected price-to-earnings ratio is only 44.8. Additionally, Nvidia's 52% year-to-date gain is more than twice as much as the tech-heavy Nasdaq Composite, NASX, has gained. This is a noteworthy accomplishment given that Nvidia's stock plummeted in April due to concerns that trader restrictions and tariffs would negatively impact it. For a large portion of the year, Nvidia was really prohibited from selling its H20 processors in China. The H20 chips are not as powerful as the company's Hopper H100 processors, but they can execute some AI tasks up to 20% faster. They were created especially for the Chinese market in order to comply with U.S. export regulations. Then, claiming national security concerns, Beijing removed Nvidia from the market soon after the company revealed that it had an agreement to export its H20 chips to China. Given that Nvidia had a commanding 95% market share in China, and that sales there represented for 17% of the company's revenue in the 2025 fiscal year, it was a significant issue for the company. President Donald Trump's announcement earlier last week that he will speak with Chinese President Xi Jinping about Nvidia's Blackwell processors, dubbed the super-duper chip, sent Nvidia shares into a frenzy. Nvidia is developing a processor using the Blackwell architecture for the Chinese market. The catalyst that caused Nvidia's stock to surpass $5 trillion on Wednesday was Trump's remarks. Whether Nvidia will regain access to the Chinese market is still up in the air. Following the meeting, Trump admitted that he didn't even bring up Nvidia's Blackwell chips with Xi. However, if you listened to Huang in Washington on Tuesday, you left with the conviction that the future of Nvidia won't be determined by the decisions made by politicians. This is due to Nvidia's strong desire to create GPUs that will power quantum computers, the next generation of computing. According to Huang, Nvidia is collaborating on the development of accelerated quantum computers with 17 quantum computing firms. He stated, "We now understand that in order to control the errors and have the two computers working side by side, it is imperative to connect a quantum computer to a GPU system. This is how quantum computing will develop in the future." In order to lay the foundation for AI gigafactories that can run AI applications using tokens, the business is also developing and expanding the AI Factory Research Center, which will be powered by the Vera Rubin platform. According to him, tokens are AI's language. Almost everything can be tokenized, including spoken words, movies, pictures, chemicals, and even DNA and proteins. This factory creates tokens that must have the highest potential value at incredibly low prices. These factories were new. And there are hundreds and thousands of chips in these plants. Analysts are incredibly optimistic about the stock, which is not surprising. The stock of Nvidia is rated as a strong buy by 40 out of 47 analysts that follow the company, and a moderate buy by 2 more. Only one has a strong sell rating on file, while 4 others advise holding. Although Nvidia's stock is now at its mean price objective of 225.86 cents, a potential 58% increase is suggested by the most optimistic prediction of $320. Nvidia would have a $7.77 trillion market valuation if that were to occur. Palantir is one of the most intriguing elements of the AI revolution, if Nvidia is the defining firm of it. The partnership between Palantir and Nvidia introduces a new paradigm in the use of AI and data analytics. Palantir is one of the few firms that has achieved multi-bagger status on its own merits, independent of its affiliation with the chip manufacturer. A notable and significant relationship that the corporation revealed during its GTC conference was with Palantir. According to the partnership's conditions, Nvidia and Palantir will collaborate to develop an integrated technological stack for operational AI, fusing Nvidia's accelerated processing, software libraries, and open models with Palantir's AI-based decision intelligence platform. This partnership brings together 2 influential AI companies, whose stock returns have produced huge profits for investors. Specifically, the partnership provides opportunities for both companies to strengthen their emerging but growing secondary businesses, Nvidia's software segment and Palantir's commercial clientele. Nvidia's goal in integrating its algorithms and computational power into Palantir's ecosystem is to increase the profitability of its software products. This move gives market players confidence that the company offers far more than just GPUs, its primary hardware sales, and has transformed from a component supplier to a full-service provider of AI infrastructure. This change strengthens its position in cutting-edge fields like physical AI and autonomous agents, which CEO Jensen Huang is particularly interested in. By utilizing Nvidia's processing power and algorithmic capabilities, Palantir is able to increase the effectiveness of its ontology framework and produce faster and more advanced agents that appeal to picky corporate clients in sectors like government services, procurement networks, and logistics. Palantir's shift to business-oriented deployment scenarios is further supported by the agreement, which might lead to consistent subscription revenue and longer engagement periods. Nevertheless, difficulties still exist. Palantir must effectively integrate Nvidia's technology into its architecture and convert them into real advantages for customers. In contrast, Nvidia has challenges when integrating its complex algorithms into various business settings, a challenging task that necessitates considerable customization and alignment with customers' pre-existing technological frameworks. Which stock will be more profitable now? That is the billion-dollar, if not trillion-dollar question. The response is both. In the era of artificial intelligence, investors' portfolios ought to include both Nvidia and Palantir equities. Even while Nvidia is still the clear leader in the semiconductor industry and is largely responsible for advancing global AI goals, Palantir is unparalleled in its ability to use AI to deliver insightful data that is vital to business and government decision-making. One cannot expect more from the companies in terms of finances either. Over the last 2 years, Nvidia's and Palantir's earnings have both exceeded street estimates in a row, along with growing margins. The situation stayed the same as of the most recent quarter, when both companies recorded notable annual growth in earnings and revenue. Palantir's quarterly revenue surpassed the billion-dollar mark for the first time, while Nvidia's Q2 2025 revenue of $46.7 billion marked a 56% year-over-year YoY growth rate. Palantir's $1 billion in Q2 2025 revenues represented a 48% yearly increase. Nvidia's earnings jumped to $1.05. This represents a 54% increase over the prior year. Palantir's $0.16 EPS, on the other hand, indicated an even more pronounced gain of 77.8% within the same timeframe. Additionally, operating cash flow stayed strong. While Palantir's net cash from operating activities for the same period was $539.3 million, a significant increase from $144.2 million the year before, Nvidia's increased to $15.4 billion in Q2 2025 from $14.5 billion in the same period last year. Lastly, there is a significant disparity in the performance of the share price. Palantir has risen 169% during the same time period, whereas Nvidia is just up 54% year-to-date YTD. It would be foolish, though, to compare the share price performance of a company that recently became the first in history to have a market cap of over $5 trillion with that of a company whose market cap is nearly a tenth of that of Palantir, which currently has a market cap of $471.6 billion. With an average target price of $225.86, analysts have classified Nvidia's stock as a strong buy overall. This suggests a roughly 10% increase in value from the current levels. 40 of the 47 analysts who are covering the stock have rated it as a strong buy, 2 have rated it as a moderate buy, 4 have rated it as a hold, and 1 has rated it as a strong sell. Analysts are a little less excited about Palantir stock because of its aggressive prices. It has been assigned a hold recommendation. The high target price of $215 suggests an upside potential of roughly 4% from present levels, given that the mean target price has already been exceeded. 4 of the 21 analysts that follow the stock have rated it as a strong buy, 14 have rated it as a hold, 1 has rated it as a moderate sell, and 2 have rated it as a strong sell. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
To piggyback that, though, what you've seen the data that AI spend is 92% of the growth in GDP for the first half of 2025. How can that be sustainable? It's 4% of GDP now.
Well, I guess the question on the sustainability is how can it be sustainable next year, next 2 years? It can be because of this intense race that's going on. Eventually, there's going to be this leveling off, and eventually the absolute dollars will probably decline. My guess is we're several years away from that, but I mean the law of large numbers will catch up to that. But I think it kind of sending a mixed message here. I think that the clear message from my perspective is these numbers are mind-bending, and I think that they're going to continue to move higher. If you look at what on September 9th, Susan Lee from the CFO of Meta said at the Goldman conference, is that she basically gave some expectations that they're going to be growing CapEx close to 40% for the next 3 or 4 years. So, Steve, I think we're going to hit a wall at some point. We'll slow down at some point. Maybe not hit a wall, slow down. But I don't think it's close. I think we're going to be having the same conversation 6 months from now.
What levels are you watching on the S&P 500 today, KG? Good morning.
Good morning. Yeah, I mean, if you're kind of looking at this market right now, you are still seeing a little bit of a rotation. Over the last 5 minutes or so, since the last time I was on the network here, we actually did see breadth starting to expand. We have over 50% of the stocks in the S&P 500 in the green so far, and you're starting to see financials actually picking up a little bit of steam. But unfortunately, that comes at the expense of maybe some of these mega cap names actually selling off a tad bit. Apple moving to the downside. Even Nvidia, which was trading at around $207, is now trading at around $205. So you are seeing maybe some pressure on the cap-weighted S&P 500 to the downside, even though we're still in the green, but the equal weight is actually moving higher. And that has been the theme all week, where we have seen this inverse relationship. As market breadth expands, we usually have seen the S&P 500 actually move to the downside. And when we do actually see this concentration, we see it move to the upside. That's just kind of mathematical mechanics, if you will. So overall, we are seeing a little bit of a gyration, volatility inching up here a tad bit. We were trying to retrace some of the losses that we saw from yesterday, especially going into the close, which is fairly ugly when you're looking at the volume spikes that we saw for the last 10 minutes or so.
Okay, and of course, month's end now today as well. I'm just wondering, as we look across what we heard from 5 of the Mag 7, the mega cap tech earnings this week, it certainly was a little bit of a mixed reaction off the back of what we got from those. What's your sort of overall takeaways from this week's numbers, particularly in light of what we got yesterday from Apple and also Amazon, which seems to be really supercharging the market today?
Yeah, I think it's a couple of things. I think the big area obviously is CapEx spend, and the increase in CapEx spend from all of these companies that did kind of report this week. Their story around the CapEx, where it's going to be utilized for, and when they do see a return on investment potentially emerging here, has been the difference maker. Meta was actually a little bit vague when it came to their CapEx guidance moving forward here, and once again, they could not really quantify how that's going to impact their numbers moving forward. And so this market did obviously hit that stock. We are seeing it down on today's session as well. On the other side of that, Amazon seeing AWS growth, revenue growth, the highest that it's seen over 2 years, obviously increasing their CapEx guide, cutting some jobs as well. But they are seeing some performance, and they are seeing an uptick when it comes to AI demand. So you are seeing that stock being rewarded. And for Apple, I think the current quarter that was reported, especially the China sales, did miss the street's expectations. But their explanation for why is really supply chain and not really demand driven. So you did see an initial spike. Seeing a sell-off post-earnings right now, you're seeing some of those gains given back, but that's usually the norm when it comes to Apple. So I think it's just the fact that not only are you increasing your CapEx, what are you spending that on? Where do you see the return? How transparent is that return going to be over the next couple of quarters or so, even the next couple of year or 2 years? And that has been the difference maker when it comes to these earnings for the last 2 days or so, from Microsoft to Google to you name it, Meta. They all kind of had their own different story to tell right now.
Right. Oh, for sure. And I see that more than 60% now of the S&P 500 has reported, and we're looking at over 80% beating expectations, 150 more to go today and next week.